Now we have an exciting investment report launch, and that will be delivered by Glenn Barkley. Glenn is an experienced economist working across data and media organizations. He has over 15 years' experience in FDI and economic development and has worked on over 100 FDI-related assignments for governments and corporates. Glenn specializes in investment trends, location benchmarking, and data analysis. In his current role, Glenn has built and manages a real-time greenfield FDI tracking database, as well as a database of multinational enterprises, monitoring their subsidiaries and revenue changes. He also writes data-driven FDI and economic articles for investment.ai. Additionally, Glenn works closely with the company's VMS team, compiling company target lists for investor outreach campaigns. Glenn also advised on best practices in marketing economic development outreach towards a corporate audience. He was previously with the Financial Times, where he was the head of benchmarking services for FDI intelligence. Glenn managed the FDI benchmark platform, FDI rankings, and consultancy work undertaken by FDI Intelligence, as well as heading up research for GIS planning. Glenn is based in the UK and has a degree in economics from Queen's University, Belfast. Welcome to the stage, Glenn.
Morning, everybody. Thank you so much for attending a breakfast, especially after the gala dinner. I do appreciate you coming down early, and I hope you've helped yourself to some tea and coffee and breakfast. This morning, we're really pleased to kick off AIM on day 2, talking about what is the next leap in FDI for the Middle East and Africa region. I'm Eleanor Slinger. I'm the Regional Director of Investment Monitor, which is an FDI website owned by Global Data PLC. Global Data is a data analytic company listed on the London Stock Exchange, which tracks over 18 different industries and has over 30 B2B websites, including Investment Monitor, which, like I said, is an FDI website. It is free to access, so please do check it out. And we have here today a very esteemed panel of speakers who I'm very pleased to introduce. I'll let you actually introduce yourself, because I know you've got a long, sort of illustrious sort of career, so please do tell people about your what you've been working on. So David Parker to my right, welcome.
Thank you, Eleanor. Pleased to meet everybody. Look forward to networking and having a conversation with you later this morning. So my career has been based around investment promotion, economic development, working with different locations internationally to assist with their investment attraction. That work has taken me to North America, Asia, UK, EU, and for the last 7 years I've been based here in the Gulf. 5 years in Bahrain, and 2 years in the UAE, based out of Dubai. Most recently, my work has been with Vistra Middle East, focused not so much on investment attraction, but assisting companies coming into the UAE to set up their entities and keep them in good standing.
Thank you, David. And to his right, we have Martin Casper. Welcome, Martin.
Hi, hello. Thank you. Can you hear me?
Yep.
Yeah. My name is Martin Casper. I work as Head of Corporate Development for a German Mittelstands company. We are probably market leader in battery cooling for the electromobility, and there I'm responsible for setting up foreign production plants around the world. And I sort of write on topics of FDI, IPAs, and startups on the side.
Thank you, Martin. And all the way from Belfast, we have our Chief Economist, Glenn Barkley. Welcome, Glenn.
Morning, everybody. Yes, I'm Glenn Barkley. I'm Chief Economist at Investment Monitor, which is a B2B website that focuses on FDI, and I'm also head of FDI services at Global Data. So yes, my background, I've worked in FDI for about 15 years now, working a lot with IPAs and government agencies in order to try and attract foreign direct investment to their locations.
Thank you. So, like most world regions, the Middle East and Africa is a very exciting region. I'm based here in Abu Dhabi and have personally seen the growth in the Middle East and found that very fascinating. But we've all been heavily impacted by COVID-19, and it might feel as if it's something of the past, but we're still sort of seeing some of that impact. And foreign direct investment or foreign investment levels have fell across those regions. But the Middle East seems to be one that is perhaps least impacted because of investments and foresight, with the number of inbound FDI projects falling 21% according to our report that we're about to announce. We did see that there were higher declines in Asia and Oceania. So today we want to talk a little bit about what is the next leap and where are we going to see those sort of changes coming from, and especially how were those two regions, Africa and Middle East, affected by COVID, and what are the sort of sectors that are going to be helping to rebound. And I think we can all sort of agree that, you know, the adoption of data, digital and technologies is more advanced and more aggressive nowhere else in the world than here in the Middle East. But I do think that with Africa on our doorstep and with the investments of data centers and various other technology players, we will see that leap happening in Africa as well. And you can sort of see that from a lot of the IPAs that are exhibiting here, who are very ambitious with their plans and leaping forward with things like renewable technologies. So Glenn, I mean, if you could start us off with what has been driving this sort of record inbound FDI into the Middle East, Africa region?
Yeah, so I think the first thing I want to say is that the data that we're speaking about is greenfield investments. So there's various different types of investments, and it's important to be clear about that because there's different trends in different forms of FDI. So on the greenfield side of things, we did see it effectively collapse in 2020, dropping by about 17%. So a lot of the growth that we've seen in 2021 and in 2022 is a rebound. So I'm putting a lot of it down to this prolonged rebound. But if we look at areas such as the Middle East and Africa, the growth is beyond that. So we're seeing a doubling of greenfield FDI projects into the Middle East compared to 2019 and 2022. And Africa has grown by over a third as well. And they're both showing that the rebound in 2021, where there was this huge spike, we're seeing continued growth. It is a little bit flatter. We'll see this on some of the slides later on. But it's being driven really by the UAE is the number one destination country. So for the UAE, it's all about political stability, business-friendly environment, favourable incentives, availability of talent. So all the key factors that investors are looking for, especially in times where there's a lot of geopolitical issues, there's a lot of different macro factors that are coming into play. Stability is a real key area. So that's driven FDI into the UAE, which has certainly bumped up a lot of the figures that we've seen in the Middle East and Africa region. But then there's other countries such as Saudi Arabia, the opening up of Saudi Arabia. We see then strong investments in areas like tourism. Qatar's benefited a lot from having the world's eyes on it with the FIFA World Cup. And that's across a lot of different sectors. And then in Africa, as you alluded to, we're seeing this huge push in terms of communications, particularly in data centers, points of presence, internet exchange points, and renewable energy as well. So very much sector-based in Africa. And yeah, we'll go through some of in a bit more detail, and we'll delve into the data in a little while.
And Martin, based in Europe, I mean, we saw from the report that we're about to sort of launch that it contributed to nearly 25% of FDI into the Middle East, Africa. Why do you think that's the case? Is it on the increase?
Well, difficult question on two counts. One, I think figures are always tricky in as much as what are we measuring in terms of flows? Are we measuring the number of projects? Are we measuring the jobs created? Are we measuring the investment sums dedicated to a certain country? And then the other bit, which makes it really difficult to answer that, is what type of investment are we looking at and what does that mean for the future? I think, as Glenn said, the Middle East and particularly the Emirates have done a sterling job in promoting themselves as a very stable, very reliable partner for FDI. So I really don't see much of an issue there. When it comes to Africa, I'm maybe not so sure, because I would argue that a lot of the investment in Africa is resource-based, sort of mining, getting raw materials out of the continent. And in the medium term, that probably might take a hit on account of the Europeans introducing ESG legislation. And while that is sort of well meant, that is sort of with the intention of sort of making the world a better place, the way how those supply chain laws are structured sort of in a way creates a risk for the corporates investing in countries with regulatory regimes which are not entirely stable. So in that respect, I think some corporates might refrain from investing in countries that are seen as not entirely stable in the medium and long term. And the second bit is, there seems to be a protectionist research. Take Nigeria is sort of ramping up the protectionist measures, or take Zimbabwe sort of stopping the export of unrefined lithium. This is in no way a moral judgment. I mean, in a way, totally understand that you want to keep the value add within the country. But if you're changing at short notice the rules of the game, as a corporate, you look at this and think, well, am I certain that in the name of justice I'm not expropriated, or I don't know, any other rule is changed at very short notice either? So I think it is more a perception rather than anything else. But in that regard, despite the situation that this is a super favorable time, resources are the new big thing, I'm not entirely certain if the risk perception of the corporates isn't holding us back.
I'll just ask you to speak more into the mic so I can hear what you're saying as well, just so you know. Great. Well, thank you so much. And David, during your time, you've worked in Bahrain and the Middle East for quite a few years, Hong Kong, Wales, and you've sort of seen how the regions are sort of changing, and the shifts and the focus on sectors, for example, are changing. And can you tell me a little bit about your time with IPAs and how they can remain agile to position them with all these changes and macroeconomic changes at the moment?
Yeah, I think it's been a massive time of transition for investment promotion agencies. I've been doing this for longer than I care to say, and historically, investment promotion was about physical interaction. So you jump on an aeroplane, if you're representing, let's say UAE as we're in Abu Dhabi, you jump on an aeroplane to Silicon Valley, you engage with investors, you raise the profile of your location, you encourage them to consider expansion into the Middle East, encourage them to consider UAE as a base. COVID changed that, because suddenly we couldn't jump on aeroplanes, we couldn't interact physically, everything went online. So suddenly you saw IPAs focusing much more on interactive websites, on becoming more digital, running webinars, etc., etc. Now that had massive benefits obviously during the pandemic, because it allowed IPAs to continue to do what they do, but using virtual tools instead of operating in the physical space. But that, of course, has got limitations as well, because one of the most compelling ways to attract investors is to develop relationships. And to develop relationships, you need a certain degree of physical interaction. So I think the successful IPAs moving forward will be the ones that can get a really good balance, a really good hybrid between the two, that are very impressive in terms of their digital presence, their online presence, able to interact with investors around the world online, perhaps through interactive tours of their location, for example, but are also able to jump on that plane with delegations and interact physically as well. I don't think it's a case of one or the other post-pandemic. I think it's a case of how do you get the right balance between the two. And the IPAs that do that effectively, I think will position themselves very competitively moving forward.
And let's talk a little bit about the macro factors, or what we call global data themes, and what that does to affect companies or investors and how they invest. Glenn, we did a workshop on Sunday talking a lot about the sort of 3 themes that are going to affect companies and keep CEOs up at night. Can you share a little bit more about that and how that affects FDI around the Middle East and Africa especially?
Yeah, so I think just to try and define what a theme is, first of all, every IPA has target sectors. Those target sectors have evolved over time. Instead of targeting all of software that like everybody does, it's trying to get those niche areas. So what do you really excel in? And is at those subsector areas. Themes are more cross-cutting, so there's tech themes and there's macro themes, but digitalization was the top theme. And based on our data that's tracking investments at the minute, and there's other ones that I will show a little bit later. But we asked our head of thematic research, who focuses more on the company side of things, and again, it's interesting the distinction between the company viewpoint and an IPA viewpoint. And he talked about AI, he talked about energy transition, and they're key areas that do appear on the list that I'll show, but they're further down. So what that tells me is that on the company side of things, they're thinking of this much more advanced to what IPAs are. And it's up to IPAs, as you know, David made a really good point there about having that digital presence. Within that digital presence, they need to be talking about these key themes and talking in a language the corporates better understand, because as you say, we define it by a theme as what keeps a CEO awake at night, and that's exactly what IPAs should be preaching about. So they need to be talking about geopolitics and the impacts of geopolitics. They need to be talking about how AI is going to transform the industry, and also to have the foresight of what's the next big thing, what's the key thing that's going to happen in the future. And also it positions an investment promotion agency as being a leader and understanding and giving it that, you know, back to David's point, that real competitive advantage. If you're trying to buy something off anybody, if they know what they're talking about, no matter what it is, you're trying to buy a pair of shoes, a shirt, if they know and you get buy-in to that experience, they're really knowledgeable, then it's going to stand them in very good stead.
And Martin, working for a private company, does that sort of message resonate with you? How important is it for countries and IPAs to sort of talk directly to the companies and understand your sort of company issues?
No, absolutely. I just couldn't agree more with what Glenn said. It is the different perspective. A lot of IPAs come with the argument of, we need to develop that region, which is totally understandable from the perspective of the country. But that is not a metric a corporate would in any meaningful way imply. For the corporate, it's the safety, security, do I find qualified labor, what's the cost of, cost of electricity, what's the cost of labor, but most importantly, is there political and economic stability and what is the regulatory framework? Because if you look at it from the corporate perspective, that is sunk cost. There is a lot of money being sunk in a country, and I want to be sure that this is safe today, tomorrow, and in 10 years' time. So there is sort of the long perspective. And the other thing that Glenn said, which I totally agree with, is, do IPAs really know what they're talking about? Everybody says, we are world market leader in automotive and world market leader in digital. And when you then talk to the IPA and it takes them 3.5 weeks to come back with an answer, you sort of have a slight element of doubt whether they're really totally in there or not. So if you're pitching yourself as an expert, you need to have at least one expert in the field to be really able to talk about that very eloquently.
Was that something that you saw in the places that you worked in? Is there a discord between selling and actually listening and engaging with your customer effectively?
Yeah, I think the number one mistake that many IPAs make is they go straight in to meet with the company and start talking about their location and its various benefits. And one of the most common pitches is quality of life. Well, hundreds of countries around the world have a great quality of life. It's not necessarily differentiating themselves. Instead of listening to the company, understanding its needs, understanding its drivers, understanding what keeps the CEO awake at night, and then being responsive to that. But I think it starts before that conversation even takes place. Glenn talked about data. There is now so much data available to IPAs that I think an effective IPA needs to be using that in 3 ways. First of all, in terms of analyzing which companies they should be speaking to in the first place, which companies have a good fit with their economy, which companies have a good fit with their ambitions to grow the economy, and then putting together bespoke propositions, if you like, to target those companies. The second thing that data can do is give you a huge amount of information on a company of any size, whether it's a startup or a scale-up or a listed company. So you're going into that conversation in an informed manner. But I think the third thing, again, before you even, if you're an IPA, before you even engage with a company, is do you even have the right offering in place to be having that conversation in the first place? So if you know you're going to be speaking to a lot of companies whose number one driver is access to finance, yeah? You know, have you got the ecosystem? Have you got the venture capital? Have you got the necessary proposition in place to be having that conversation in the first place? Because if the answer is no, then what you really should be focused on as a priority is how you develop that ecosystem, how you put the right regulations in place, how you put the right legislations in place, how you develop access to finance, how you develop the right talent, so that when you're having those conversations with companies, you have a very strong proposition that you can put to them.
Martin, you had something?
Yeah, I absolutely agree with what David said. When it comes to IPAs, there is one thing that always slightly baffles me. There is so much emphasis on pure marketing. There's far less emphasis on facilitation.
Yeah.
And there's basically nothing in terms of aftercare, which, if you think about 60% or 70% of the investment flows in country is actually reinvestment of existing investors. So IPAs, to a large extent, sort of ignore the biggest market they're actually having in terms of improving their investment position. And the step before, facilitation is such an important bit, and sort of absolutely the ecosystem is of paramount importance. And if you're having slight difficulties, slight weaknesses in the country, rather than throwing money at investors in terms of incentives, help them, facilitate them, particularly if you're talking to smaller or medium-sized companies, and I would argue this is the next big wave of investment. Help them in terms of how to get in the country, how to get set up. Free money is nice, but the key importance, the key interest is to get my production up and running as quickly as possible and as safely as possible. That is far more important.
Can I just say as well that, just on Martin's point, it's FDI is still personal as well. So yes, we talk about all these factors that need to be in place, but anybody that works for an IPA, you're effectively brand ambassadors for your location. So you need to be a good example. You need to be very engaged with that person, and David's point in terms of the offering. And we know that there's some IPAs might receive an inbound inquiry, which is the dream, and you don't have to do any business outreach, but then they take 3 weeks or 4 weeks to get back on a simple task. By that stage, the relationships are already waning, and another IPA could be very engaged with that company. So all of those macro factors are probably more important in the big picture, but I think for people that work for IPA, so a lot of the people in this room, they're of the utmost importance as well whenever it comes to this investment decision-making process.
So what is the opportunity for somewhere like Africa? I guess it's one of the largest trading blocks. Are we seeing Africa work better together? Can they create an ecosystem that's pan-Africa? Is that the next leap for that region? Anyone?
To me?
Go on.
I'll just a couple of words. I think yes, because I still feel like from people that are outside of Africa and don't get to speak to the African people directly, there's still that perception of every country is treated similarly. And we hear an event about a country in Africa and we tarnish the whole of Africa with that. So those companies, the people, need to do better due diligence on their side as well. But certainly trying to get the eyes to focus on Africa. I was talking to a few people before here as well. We do this with cities. So a Chinese company coming to invest in Europe, they've never heard of Belfast before. they've never, and if they want to invest in the UK, unless you're London, they don't know any other cities in the UK. So I think there is some regional necessities that need to be done as well from that perspective. But I'll let Martin and David go into a bit more detail.
When I used to fly around the world promoting Bahrain, the single most frequent comment that I would get is that Bahrain and the wider GCC would be much more attractive if it was more joined up. So if we're setting up a financial services operation in Bahrain, for example, we have to go through the regulatory process, we have to go through the licensing process. If we then want to replicate that model in Saudi Arabia, we have to do the same thing all over again. If you compare that to EU, for example, where you've got fund passporting and all sorts of arrangements, where if you set up in Luxembourg, you can operate across multiple countries. I think if the Middle East or Africa was able to be more joined up in its approach, then suddenly it becomes a much more compelling offering, because you're competing with the EU, which is huge, with China, which is a huge economy, with the US, which is a huge economy. And no single country, I think, in Middle East or Africa can do that in its own right. But if they start to become more joined up as markets, then it becomes a much more attractive place for businesses to locate. And this isn't my comment. This is feedback that I had from hundreds of investors around the world, time and time again. If we could set up in one location, one jurisdiction, and then operate across multiple countries more easily without having to go through the same process in each market, then it becomes a much bigger market, a much more attractive proposition.
And that you're not just talking about the regulation and policies, I imagine. I mean, I'm, as an advocate of data and data-driven and digital, is there a role that can play in this region to sort of advance that cause? How can that play a role in advancing the joined-up approach?
I think digital transformation is key, both in terms of the interaction between different jurisdictions, but also the way that those jurisdictions then engage with potential investors. Online now, the world is effectively a village. And if you can be more effective from a digital perspective, then, but again, you have to have the right ecosystem in place in the first place. So you have to have the right universities, the right talent, the access to finance. All of these things come first before you're able then to interact both as individual countries and also collectively with the wider world in terms of attracting them as investors.
And Martin, you mentioned earlier raw materials are going to be a larger sort of part to play, especially for Africa being a food bowl for places like Europe. And do you sort of start seeing that's the big leap? Perhaps it's going to be the next shift towards this region?
In terms of the future, there's maybe a bigger gain if you get beyond pure resource supplier, if you have your own manufacturing in the country. But for manufacturing to be really an interesting destination, you need to have a large enough market. You have lots of African countries that are relatively small markets in their own right, and to cross borders very often is incredibly difficult. In that regard, if you have a bigger block, it would make it so much more attractive, because then a manufacturing investment would allow you to sell to multiple of countries. So in that regard, 1 + 1 for Africa definitely would be far more than 2, in as much as you are a bigger potential region to get into. That being said, I think it is incredibly difficult, because you have a very heterogeneous group of countries in terms of how far they are developed. And we see that in Europe. I mean, there's a massive difference in countries, and out of that comes a difference in interests. So it's not an easy task, but sort of as a long-term perspective, I think that would probably be one of the big steps, the big leaps for Africa to not just be a resource location for the world, but to be a manufacturing location for the world and to be a market, a proper, coherent market in its own right.
Absolutely. So just to sum up, I guess if you could share with me your sort of final thoughts on what you think will be the next leap or the next opportunities for this region, and what is your sort of message for the IPAs in the room as well as the investors in the room for this region. So I'll start with you, Glenn.
I think adapting to what could be this new world order. We'll talk in the presentation maybe a little more about friendshoring. Trying to stay on top of the trends, I think, it's always important, but it's never been as important as of today. So in terms of identifying what are your key source markets, for example, so you have to be staying very topical, geopolitics being the main topic around that area. In terms of sectors, I think renewables, fintech, AI, but it's also going to be interesting to see the adaptation and again this Africa leap that we're talking about in terms of communications and renewable energy. But what about things like quantum computing, which is on the periphery, but nobody is actively trying to attract those types of investments at the minute. But quantum computing is going to be a game changer whenever it actually becomes into the mass market. So yeah, keeping abreast of those types of topics and trying to position yourself as a thought leader. And on the digital side of things, I agree with what's been said before. Nail down your proposition, make sure it's a strong proposition. Some advice for IPAs, and continually update your proposition material as well. It's no useful, if we've learned anything from COVID, your data that you have in 2019, and you certainly don't want to show your 2020 figures. So you want to continue, and that stands you in good stead as well. Maybe David could touch on that point about how he's done that in some of his agencies, because investors are always looking for information now and how the market's going to change in the future as well. So what predictive intelligence can you give me on how my investment's going to look now or in 18 months' time, whenever the project actually happens? Remember, these projects take 1.5 to 2 years typically to actually come into play. So I think they would be the main areas in terms of sector drivers, themes, and looking at your key source markets.
Martin?
I think we're living in interesting times, in as much as there was a set industry for 100 years. It was manufacturing, and it's really difficult to catch up if you have an incumbent with a good structure. We're now at a point where everything is changing with the convergence of many different technologies, generative AI, artificial intelligence. If there is a time to sort of get in the race and stake your claim, I think this is now. But that necessitates that you have sort of what we talked about earlier, the ecosystem, the groundwork in place. But I think now is a very good time to sort of make your mark, because the structure of industries is changing quite considerably. So I would see the current moment as a massive opportunity.
And last, David?
I think what excites me, innovation. What made the USA a leading world economy? On the spirit of entrepreneurship. It was the place where ideas were born. And many of us, my iPhone, for example, developed by Apple, Silicon Valley company. And when we start to see both the Middle East and Africa become the place where ideas are born, that spirit of entrepreneurship that will drive innovation for the region, that's what excites me, because I'm starting to see it happen. Here in the Gulf, for example, the Gulf countries for a number of years now have been focused on diversifying their economy away from oil. Yeah? So we're suddenly starting to see really exciting developments like NEOM in Saudi Arabia, for example. I was going to say the first world-leading smart city the size of Belgium. If you speak to the guys at NEOM, they say it's not a smart city, it's a cognitive city. A smart city operates with real-time information. A cognitive city predicts information. So that is a good example of something in the Gulf that is hugely exciting and transformative. Africa, I did a lot of work in the fintech, financial technology space, and I got to meet a lot of African entrepreneurs that were developing payment solutions for the unbanked. Yeah? So there's a lot of unbanked people across the African continent, and these guys were developing solutions that enable them to transact on their mobile phones without a bank account. So just two examples, I could give you 100 of the innovation I'm starting to see coming out of Middle East and Africa, and I think that's what excites me. If this part of the world becomes the place where ideas are born, then that could be transformative.
That's fantastic. And I think, we just got to keep in mind that what we're the strategy of today for a lot of the IPAs will have impact for the next, 2 to 5 years. And so planning ahead and knowing what the next leap is so important. And I think a lot of what we've been talking about throughout this week is trying to predict that. And, you can't do that without data and insights. So hopefully you'll be able to stay, have some refreshments for the next half hour and meet some of the audiences. But then Glenn will be announcing and releasing some of the data that we've you've crunched on FDI in the region, which will hopefully prove that this is the beginning of the next leap. So thank you very much, my panelists, for joining us this morning, and I hope that this was useful for you all. So thank you very much for your time.
Apologies, everyone, I was way ahead of time here. The report launch is at 10 o'clock, so please feel free to network, have some refreshments in the back, and Glenn will be back here at 10 o'clock for the exciting investment report launch. Thank you very much.